This is a 1,000 naira note, and for many of us, what we used to buy with these notes 2 3 years ago was way more than what we used to buy with it today. The note itself hasn't changed. So what did? Hi, my name is Olufolake and welcome to the 90 of 30 Days of Policy, a series where I help you make sense of policy. Today we are diving into part 2 of our series on economic policy to understand the force that dictates the prices you pay every single day. Let's get cracking. The value of our money is not fixed. It is in a constant battle against an invisible force called inflation. And the institution in charge of that fight isn't the presidency, it's actually the central bank, which uses its powerful and often controversial toolkit called monetary policy. If fiscal policy is the government's wallet, then monetary policy is the job of the Central Bank of Nigeria to protect the money inside that wallet. Its main goals are to keep prices stable by fighting inflation, manage the country's foreign exchange, and ensure the entire banking system doesn't collapse. Now, the CBN's toughest and most visible battle right now is against inflation. Inflation is essentially the rate at which prices for goods and services are rising, which reduces the purchasing power of your money. That is why what you used to buy with 1,000 naira before, you can no longer do that. And here's the data. The National Bureau of Statistics (NBS) reported that Nigeria's headline inflation in September 2025 was 18.02%. This means that on average, the general price level was about 80% higher than it was in the same month last year. So as the CBN fighting this, its primary weapon against this is what we call the monetary policy rate (MPR), which it's recently adjusted to 27.0%. In simple terms, by raising this core interest rate, the CBN makes it more expensive for commercial banks to borrow money. So these banks then make it more expensive for businesses and individuals to get loan. And the theory is that if borrowing is expensive, people will spend less, which will then cool the economy and slow the rate of price increases. Now, you may be thinking that this is actually a problem because as a small business owner, how am I supposed to be able to expand my business or survive if I can't even get an affordable loan from the bank? And guys, that is the brutal dilemma of monetary policy. It is a tool that is used to fight inflation. And inflation is a problem that hurts all of us, right? So that tool that they use is high interest rates. It is a tool that can stifle economic growth and hurt businesses. See, it is a constant balancing act. The CBN is often in a position where any choice it makes can have a painful side effect for someone. So, guys, monetary policy is the CBN's high stakes mission to defend the value of the naira, and its choices have a direct impact on your life. Now that you understand the two arms of economic policy, that is fiscal and monetary policy, tomorrow we're going to go into exploring the different policy areas.